Hi everyone, welcome to Share and Review. Today we're going to take a look at Vulcan Steel. Before I do the housekeeping, remember that this is for education purposes only. It is certainly not intended to be personal financial advice. If you're looking for personal advice, then you do need to go and talk to your own advisor. So let's take a look at Vulcan Steel. Right. Okay, so for those of you that are perhaps new to following me, I just use Yahoo Finance. It's a free tool, and they've got some really good systems, if you like, or tools on there that I use, and I find for my own share trading, it's fine. It's enough information and enough depth for me to make informed decisions as to whether I'm going to invest in a particular share or not. So let's take a look at Vulcan Steel. I've got that over a 2-year period here. And to me, it looks like we're perhaps in a bit of a trading range. Okay, it looks, as you can see, we've sort of got some highs at around that $9.20 mark. Then we've hit another high, for $9.29. Sorry, it was $9.80, then $9.29. Then we had another spike of $9.15, another one at $9.40. So it looks like we're sort of in a bit of a trading range. And then $9 here, which was where the market closed at the end of last week. Thing is, though, that these highs are getting a little bit lower. And so are the lows. The lows are getting a little bit lower as well. So it means that it could be something to just keep an eye on. Let's run the 5-year chart and just sort of see, it does almost look like it's in a sideways band, really. It had a high of $10.97, and that was back in January 2022. But as you can see, it's almost like these dead cat bounces. It comes off, then it goes back up, comes off. But it is looking to me, just from the naked eye, without doing anything else, that it is in a little bit of a downtrend. Now, the way to actually identify that I use, I put a moving average over it. And I like to do a longer term. In this example, let's do the 200 week, in this case, exponential moving average come up. That is interesting. It doesn't want to bring up. Maybe it hasn't been going for that long. Let's make it shorter, and we'll try 100 just to try and get it. Here we go. No, it hasn't been going long enough. So as you can see, it has only just popped up above that 100 period moving average. Another way that you can do it, I can't do it on this chart, but you can put a line at the top of these highs, okay, and you will sort of get a little bit of a picture that it is trending down. Like I said, it has just popped up above the 100-week moving average last week. That sort of doesn't mean anything to me, really. Let's change these moving averages to what I normally use, being the 30. And we'll also pop on the 15. Whoops, I'll just change that color of that for easier to see. Right, so we've just only last week, you've had the 15-week moving average cross through the 30, which is a good positive indicator. I'd really want to be seeing the overall trend of this share for a bit longer, because sure, we've had the last 2 weeks that have been positive, that's been great, but it's also equally balanced out by these red candles, which indicate to me a bit of a downtrend as well. So you've got some good weeks, and you have some that are obviously negative. And when I look down the bottom here, which is giving me the volume, the big spikes that we've really got have actually only been the selling. So there's not been a lot of buying to drive this share higher at this stage. So that's why I too would want to keep an eye on it. Let's take these moving averages across, and you can see down the bottom here, these little D's stand for dividend. So the company is paying a regular dividend. It looks like it, so we've had March, and then we've had September last year. So every 6 months, it looks like it is paying a dividend, which is fine. But if you've been a regular follower of mine, you'll know that I don't invest solely for the dividends, because at the end of the day, if you've purchased a share and then it's tracked down, even though it's paying regular dividends, you may still be losing money because of that. The share loss and value is not necessarily made up by the gains that you're receiving in the dividends. So tread with caution if you're doing that. Now, if you follow me regularly, I also like to make a comparison over the main board of the New Zealand Stock Exchange, purely because that is obviously where this share is trading. So it is trading above I like to make sure that it's been trading above the main board for at least 6 weeks. And in this case, it was on the 6th week, if you like, that it has traded above. So for me, this share is really just a wait and see. Wait and see what happens. Maybe have it on the radar and just watch it for a few more weeks and just actually see what transpires with that. It's certainly not one that I would be leaping into, boots and all, going, yep, I think we're onto a good thing. I think it's a little bit of a cautionary tale and just, like I said, wait and see. So, hey, if you're getting some value out of this, do hit that like button. It certainly helps me. And remember that I'm happy to review any share or any investment that you'd like me to cast my eye over. And it helps, obviously, with the creation of these. So until next week, take care.